Hello and welcome. Sean Allison here from Cashflow Options. Thank you so much for joining me. What I want to do in this short video is show you in detail how I would go about finding a high short interest strategy trade that is about to have a short squeeze and result in an explosive move higher. So this is a bullish strategy, and it's something that I've made a lot of money with over the years. And what I want to do now is share it with all my subscribers here on YouTube. So, high short interest strategy. What is it and how does it work? Let's have a look right now. So, shorting a stock. Shorting a stock follows the conventional investing principle of buying low and selling high, but with one critical difference: the sequence of the buy and the sell transactions. So while the buy transaction precedes the sell transaction in, obviously normal investing, you buy first and then you sell later. So you buy low and sell high. With short selling, what we do is we sell first and then we buy second. So we want to sell high and buy low. That's the idea here when we're short selling. Okay, so we sell first and then buy back. It's actually called buy to cover. So AMD is a good example of how this short squeeze or high short interest strategy would work. So AMD, have a look at this. It had record high short interest at one point of 198.2 million shares. So what happens is, as a stock moves higher, so the black line is representing the stock price, as the stock moves higher in price, people that have shorted the stock, which is represented by this red line here, you can see this reached a 52-week high here, okay? But as the price started to go up, then people were forced to buy to cover the shares that they had shorted. Remember, you sell first and you buy back later. Now, what happens is, as they buy to cover their stock, it causes the stock to move higher, because what's the only way for a stock to move higher? People to be buying it. So if you get very high short interest, which is what AMD had back here, as the stock moves higher, the people that have shorted the stock have unlimited risk. So for example, let me try and explain this. If I shorted a stock at $10, this is the process, right? I go to my broker and I say, look, I want to short a stock at $10. He then goes and borrows. So I want to short a $10 stock, and I want to short 100 of them. Okay, so 100 shares at $10. So what happens is the broker goes and borrows 100 shares from someone else's account. He then allows you to sell those shares at the current price, $10 for example, times the amount of shares you are shorting, 100, means $1,000. So $1,000 is yours day one, right? That's income for you. Oh, beautiful. Sounds pretty good, right? Now, the ideal situation here is that the stock moves down. Okay, this is the best scenario for someone who shorts a stock. The stock moves down. So let's just say, for example, the stock goes from 10 down to $8. You would then buy to cover. Remember, you sell first, then you buy back later. You received $1,000 day one, shorted the share at 10, 100 shares, $1,000 cash, that's yours, right? Then you buy it back at a lower price. Again, this is the ideal situation, which is $8. So it costs you $8 times 100, the shares you shorted, $800, right? Now, you received $1,000 day one, you spent $800 to buy back the shares, you keep the $200 profit in between. That's the ideal situation. You then return the shares back to the broker, and the broker returns them back to where he borrowed them from. End of transaction. Okay, so that's the process of shorting a stock. But when you do short a stock, which is something I don't ever do, you have unlimited risk. Because if the stock continues to move up, let's just say it goes from $10 to say $15. Now you have to buy back 100 shares at $15. Now that's going to cost you $1,500, isn't it? $15, the current price it's moved up to, times the 100 shares you shorted, that's $1,500. You only received $1,000 day one. So you're going to lose $500. Now, the reason that someone would buy back the shares at a more expensive price and return them back to the brokers and flatten the position is because they have unlimited risk. If the stock keeps going up, they're going to have to buy it at an even more expensive price and lose even more money, right? So this is something that causes a short squeeze. What causes a stock to move higher? People buying it, right? So with something with high short interest, we know that if the price goes up, this black line, people are then forced to buy to cover that stock. What causes a stock to move higher? People buying it, and then it results in a short squeeze. This stock moved up 65% in 2 months. So when we get high short interest and then a stock starting to move higher and the shorts, people that have shorted the stock being wrong, they thought it was going down, now it's going up. This results in a short squeeze and the stock can move dramatically higher. And this can result in some very substantial profits. One of the ways you can use this is look for a stock with high short interest, right? High short interest would be, 15% or more, okay, so of the available float. Okay, the available amount of stocks that are floated on the exchange, 15% of those are shorted, right, or higher. That's really what you want to look for, and I'll show you how to find these in a moment. So one of the things that I like to look for is high short interest and looking for a stock that's had great earnings and then starts to move up dramatically, even gapping up, even better again. Those people that have shorted the stock have unlimited risk. They're forced to buy to cover their stock. That buying causes the stock to move higher. So that's definitely a strategy you can use. So you can look at some of these stocks here gapping up after very good earnings and high short interest and then continuing to move up dramatically, right? So these are some of the things that we look for, okay? Now, these are just some examples of stocks that are moving up as a result of high short interest and great earnings. Now, like I say, shorting stock can be very risky. So, traders here betting against Tesla lost $1.25 billion in a day as the stock skyrocketed above 500. Now, we know what's happening right now. The stock's moved from 900, the highs, down to around, about 550, something like that. So, but this is back in time. So what happened back then? Well, there was high short interest on Tesla. So these people that have shorted the stock were looking for Tesla to go down, buy it back at a cheaper price and keep the profit. Remember that. But what happened? It started to move higher here, creating a short squeeze in Tesla. So it moved from 250 to 545 in 3 months. But have a look at this. It moved from 402 to 547 in just 2 weeks. So this is a good example of a stock that had high short interest and it started to move higher and people were forced to buy to cover their short stock position, resulting in the stock moving much higher. Have a look at this. The stock Tesla went from 650 to 968 in 2 days. Look at this move. Absolutely incredible. So purchasing the 640 call, okay, have a look at this. Purchasing the 640 call here on the 31st of the 1st would have cost you $39.03, right, for every share that you're controlling. 2 days later, that same 640 strike call option you bought is now worth $259.65. So pretty amazing how this can work when you get it right. Now, there is a paid subscription here, so you can go to shortsqueeze.com. That's one of the ways you can do it, right? They can, you can use different scanners they have. They actually give you a list, and it's actually very good. But let me show you a free way of doing it, and then let me work through a complete example here and show you how I would analyze this, right? And how I would come up with a potential trade, right now. It's one thing to talk about it, but can you actually do it? That's what we want to see. We want to see practically how it works. So there's the theory, but let's get into how it actually works. So first place I would go is to FinViz, okay? Probably the best free stock screener on the internet. We come over here and we click on Screener, okay? And I would just come over here and click on All, right? Now, what we're going to do is we're going to look for stocks with high short interest, obviously, okay? Above 15% would be what I use, okay? But I'm going to look for stocks that are over $10. Typically, stocks that are under $10 are not normally shorted. So I'm looking for a stock over $10. So price, that's the first thing. I'm going to look for a short float. I'm going to go a little bit higher. I'm going to go, say, 20%. Okay, so 20% of the available stock is shorted. Okay, now average volume, I want that to be over 500,000 because I want it to be a liquid stock, get in and out of the position quite easily. And that's certainly something I want. Now, I'm an options trader, right? The most powerful, flexible investment vehicle on the planet, and this is how I make my living. So for me, it's got to be optionable. Okay, otherwise I'm not interested. And that would probably be everything that I would do, right? So there are a whole range of different ways that I scan, but this is just one, right? Just showing you a scan that I've done just now. So this gives us a list here of 40, right? So, sorry, 66. 66 different stocks here to look at. Now, while that may seem like not a lot, it's not, okay? So if we come here and click on Basic, okay, click on Basic. So what it does is it brings up a little snapshot of some of the numbers that we need to look at for the stock, and then obviously the stock chart, which is definitely something that we want to pay attention to. Now, Sean, what are you looking for here when you're trying to find a stock that could potentially move much higher as a result of high short interest and being short squeezed? Well, I like to look for the earnings per share that is increasing, okay, ideally. So, earnings per share this year, and then really what I'm focused on is earnings per share next year. So, because the market is always forward looking. So what we might do, just to cut this list down a little bit, again, what drives a stock's price? Earnings growth, right? Earnings growth drives a stock's price higher. So what I'm looking for here, if you really want to know the secret, I'm looking for when the people that have shorted the stock are wrong. They're wrong about the stock, okay? That's what I'm looking for, because if a lot of people are wrong and it starts to move up, that's when you get a very big short squeeze, right? So let me show you this because I think you'll get something out of this. So earnings per share growth next year. Market always forward looking. What's happening next? Okay, that's what we want to be looking for as well. So earnings per share growth next year. So I want something, say, let's go above 20%, which is pretty good, okay? So now that we've got that, we're down to 36, okay? So not a huge amount of stocks to look at, okay? So A, B, and B, right? Initial public offering, that's certainly been beaten down. Earnings per share this year, okay, that's very healthy. And next year, it's actually gone down, but still pretty good. Short float over 25%, which is a lot. Okay, not bad. But really, I'm looking for something as well as earnings per share going up next year. What I also want to see is something that has bounced off a level of support, that has a bullish charting pattern, that's broken above a resistance level, something like that. I need additional edges for me to want to take a trade utilizing high short interest as my edge. So what's an edge? Higher probability of one thing happening over another. So I want as many edges as I can before I will take a trade here, okay? So, yeah, not bad, right? Nothing really grabbing my interest. Yeah, this is bouncing off a trend line here, but and certainly the earnings per share next year has gone up dramatically. Short float, 33%, that's quite high. Not too bad, right? Not too bad. I might just write that one down, right? Might be one I have a look at a little bit later. And really all I'm doing is scanning through these. Sean, does this take a little bit of time? Yeah, but it really, for me, to find one good candidate here can make me a lot of money, right? So it's certainly not something that, for me, is an issue, right? It doesn't take long at all, I don't think. CVAN, yeah, that's not too bad either. Okay, I'll just write that down. CVNA, should I say. Okay, so certainly increasing earnings per share from this year to next year, but not really anything significant on the chart that's really going to help me. Earnings per share increasing from this year to next. Okay, so that's good. Bounced off this support level there. Yeah, that's okay. Nothing there. Nothing that's really grabbing me right now. Okay, so this is the full process, right? I'm just going to go through the whole thing with you so you can see it from beginning to end. I think that's how people learn better, right? I know my members learn the best by me doing this, and I think this is the smartest way to do it, because if you see the full process, then what? You can go and duplicate it. You can actually go do it yourself. Okay. All right, nothing really grabbing my attention yet. No real charting pattern, no real significant move higher that would have the shorts under pressure, people that have shorted the stock. Not at this point. So nothing there that's really striking my interest yet. Okay, so have a look at this, right? This is a very good example right here. TTCF. So what I see here is a double bottom pattern, okay, bouncing off this trend line here. Okay, so I like that pattern. I like the fact that it's bounced off this trend line. Earnings per share this year was actually negative, but look at it for earnings per share next year, 285.7%. Wow. Earnings per share quarter over quarter, 3,848.4%. My goodness me. Institutions own around 11.6% of this. Okay, interesting. Insider transactions. Yes, this is something else that I saw. Insiders, corporate insiders, people that work for the company, actually buying this stock as well. Who knows more about that company than them? Well, no one, right? So when you're starting to get insiders buying that work for the company, that's significant. Short float, is it significant? Absolutely, 35%. That's very high. So good. Average volume, 1.82 million. Okay, good. Market cap of the company, 1.54. Yeah, okay. So this one has definitely grabbed my attention for those reasons that I just mentioned. Now, if I went to the chart myself, TTCF, yeah, so if I looked at this and I sort of went something like that, I can definitely see that nice level of support here. Beautiful double bottom here, moving higher. The other thing that I see here is this here. This large volume here. So yes, it's had a big move down, right? So, you know, this stock has moved from around 28.64, you know, going as low as 15.42. But when it hit that low down here at this very significant trend line, it had a huge amount of volume. What this is called is ending volume. So everyone who wanted to sell this stock has now sold it. This normally signifies the end of a move down. Okay, so we've got ending volume. We're certainly on a significant trend line, level of support. We've got a very bullish charting pattern here, and I do like the look of this overall for those reasons. So the next thing that I'll do, right, this is my process. You guys, I'm going to give it all to you here. I'm not going to hide anything from you. I'm going to give you the full thing, even how I would trade it. I'll give you the whole thing, and you guys tell me what you think. Now, what I would look at now is, yeah, I'll have a look at that. Okay, so this is something we could look at. This is on Yahoo Finance, okay? Sorry, on NASDAQ.com, NASDAQ.com. And what you can see here is the amount of short interest, the amount of people that have shorted the stock, okay? And you can obviously see in the past compared to what it is now. Certainly a lot of people are shorting this stock. 13.1 million, right? People have shorted the stock compared to the average volume on that day of 2.7 million. My goodness me. Days to cover, 4.72. So what does that mean, Sean? What is days to cover? Another word for that is called short ratio. Okay, so short ratio and days to cover mean the same thing. What it is the average volume of the stock times by the amount of days it would take to buy back all the short stock. So the higher the days to cover, the more significant it is, because it's going to take more days of average trading volume to buy back all of the stock, all of the short stock. Okay, people that have shorted the stock. What's that going to do? That means it's going to, the rally, the short squeeze is going to continue for longer. So we want to see higher days to cover and obviously the short interest increasing. But I want to see that the people that have shorted the stock are wrong, because sometimes they're right, aren't they? And the stock keeps moving down. So certainly a huge amount of people that have shorted the stock. No doubt about that. What I would then do after I've done that is I would look at the latest earnings. Again, what drives a stock's price? Earnings growth, right? So we need to have a look at the earnings. Now, if we have a look at this, earnings. Now, when you first look at this, you go, well, Tattooed Chef or TTCF Missed. Oh, okay, so they didn't do well with their earnings. You need to look deeper than that. Okay, the market only rewards above average traders. So we want to be able to look at this and really have a deeper look at it. Okay, so when you first look at it, right, a loss of 10 cents earnings per share, they were expecting 2 cents as a loss, so that's worse. And their revenue was better though, 52.7 million compared to the consensus of 46.4, right? So that's interesting, but and you can see there that's it missed there on earnings per share, according to the consensus, and that's always what they do, right? They look at the earnings per share, they look at the earnings per share and the revenue. So they'll get together, all the analysts get together and give their collective consensus, their best educated guess as to what they think the earnings per share will be and the revenue will be. Then the actual earnings per share and revenue will come out. If the actual earnings per share and revenue is much higher, the stock will take off to the moon. If it reports in line, in other words, what they thought, won't do much of anything. If it's much worse, the stock will tank. That's pretty much how it works. So in this case, the earnings per share was worse, but the revenue was better. Okay, but let's dig a little deeper here. Revenue of 52.7 million is a 59% increase. Wow. Okay, so that's interesting. Branded sales increased 105% to a record 36 million, or 69% of total revenue. That doesn't sound too bad. When you first look at it, you're like, oh, they missed. That doesn't sound, that they didn't report as high as what they had anticipated, right? Or what the collective consensus was. But when you start to look at these things, you start to see a different picture here. So earnings and revenue in particular, revenue has really increased dramatically. 69%, 105%. Nothing wrong with that at all. And, it actually has the financials here, revenue increasing as we spoke about. So that's certainly something. Now, the next thing that I'll look at is I will go to Fintel. Now, Fintel is a very good website. It is a little expensive. It is a paid subscription, okay? But there are free ways of getting this information. And what I like about this is TTCF, short interest, right? Put that into the search engine. Then come down to the short squeeze score. They're doing a lot of the work for you, okay? So they're going to give you their score from 0 to 99. The higher it is, the more likely, the higher the risk of a short squeeze. Well, it's not a risk for us because that's what we want, right? So something that is 93.53, that is very, very high. So they believe that the chances of a short squeeze are extremely high. They use a combination of short interest, obviously, the float, the short borrowing fee rates, and other metrics as well. They put them all together to give you a score out of 99. This is very high. So, for me, something above 80 is what you want to look for. So let's have a look at this particular company and see whether this is a company that is going to continue to move down. Well, TTCF, Tattooed Chef, launches vegetable products in wholesale foods market stores nationwide. Just a couple of days ago, this news was. Okay, so that sounds pretty positive to me. We have a look at this one. Tattooed Chef expands product line with launch of multi-serve meals. Sounds pretty good as well, right? Now, what have they done here? They've completed an acquisition of New Mexico Food Distributors Incorporated, right? So this is another good thing, right? They've acquired New Mexico Food Distributors for $37 million in cash there. Very good, right? Expanding their products, acquiring. Now, this is obviously something that they want to be able to do, right? To expand their products, expand, what they're doing and how they can increase revenue. This is all beautiful. Now, we already looked at this. We already looked at the fact that they've increased their revenue by 59%, which is fantastic, and their branded product revenue was up 105%, which is just brilliant. So, pretty good overall. Now, have a look at this one. This is something that's interesting. So when we have a look at this, I think it was this one here. where we were looking at the number of stores, or was it here? Might have been this one. Yeah, it was this one, right? This is on Alpha Street. So you can have a look at this. Now, I wanted to look at the number of stores. Yeah, here it is here, right? So product expansion, which is what you want to see, right? Now, Tattooed Chef's products were available in more than 4,200 stores and 23,000 points of distribution, which is obviously a very nice thing. But we want to know what's happening in the future. So looking forward, okay, by the end of the first quarter in 2021, the company's goal is to make its products available in 10,000 stores. My goodness me, that is an incredible jump from 4,200 and 65,000 points of distribution by the end of the year. So, yeah, sorry, 10,000 stores and 65,000 points of distribution by the end of the year, not the end of the first quarter, right? Which is brilliant. That's an incredible amount of growth. So we're seeing new products being launched, acquisitions for $37 million, more than doubling the amount of stores are going to be in by the end of this year, and more than doubling the amount of points of distribution as well for their products. So my view of this, when I look at the high short interest here, is that these people that have shorted the stock, I think they're wrong. I think they're wrong, right? And I've looked at the chart, right? And I've looked at all the things that I've mentioned to you there so far. So what I will then do is I'll go to I volatility because I'm trading options, and I'll have a look at the implied volatility, this gold line compared to historical. If the implied volatility is right up here, miles above the historical volatility, I want to enter into some sort of a option strategy that involves selling options, because when the implied volatility is higher than historical, the option is expensive. So you want to sell it. You don't want to buy it. But when it's almost about the same where it is now, that's fine, right? You can go ahead and buy the option, okay? So first thing, I check that first. So I'm going to buy an option. And obviously, I'm looking for this stock to move significantly higher from here after being short squeezed with like 35% short interest, okay? So that's another thing. The other thing that I saw, which I forgot to mention, was insider buying. Okay, so this director of the company, someone who works for the company, James Daniel, right here, right, is a director of the company, purchasing 250,000 shares at $10. Okay, so he spent $2.5 million of his own money, and he works for the company. That's a very strong sign when you see corporate insider buying. Okay, so that's another thing that this particular stock has going for it. Okay, so when you start to put all of these edges together, you start to paint a picture about whether this is a high probability trade that you could potentially look to take, right? So if I was going to place an options trade on this, I would obviously need to go to my brokerage account, right? Now, what I would do is I would go to the option chains, right? Firstly, I'm going to type in the stock, TTCF. Okay, I'll just bring up the stock. Now, when you're choosing and you're going to actually buy an option, okay, now we could set up a spread, we could set up a whole range of different option strategies. I'm going to keep this very simple and just buy a call option, right, just to keep it simple, okay? There are a lot of other things that we do at CFO, but I just want to keep this simple for now. First thing I need to choose is what expiry am I going to buy? Because when you buy an option, time's working against you. So what you have to do is an option that expires 90 to 120 days or more from now is going to have very little time decay. So time is not going to impact you or work against you too much if it's longer than 90 to 120 days. Okay, so that's the first thing. I want to make sure that it's a long time out from now, right, before it expires. So for me, I would probably go out to the 21st of January, 2022. Okay, so I'm going to view those option chains. So that is 246 days from now. So like I just said, anything from 90 to 120 days is not impacted. The time value is not working against you, okay? Or the time decay is not working against you. So 246 days is perfect, okay? Now, right now the stock is trading just below $20. what I would do is I'd actually come down here and I'd look at the time value compared to the intrinsic. Another word for intrinsic value is real value, right? So obviously the further out in time, the more time value you're going to pay. The more in the money the option is, anything here in blue is in the money, okay, it'll have more intrinsic value, as you can see here, right? You can see the intrinsic value has gone up from 1750. The more in the money I go, the more that intrinsic value goes up, as you can see, and the less time value you're paying. So if I was to go at the money, we can see that the at the money has the most time value, right? $4.10. The entire amount of that option you're buying is made up of time. I don't necessarily want that. So what I'm going to do is I'm going to look at the 1750 strike. Okay, so the 1750 strike has, as you can see there, $2.72 of this option is made up of time value, and $2.48 is intrinsic or real value. How do they work out the real value, Sean? Well, 1750, which is the call option we're going to buy, minus the current price of the stock, 1948, which would give you $2.48 of intrinsic or real value in this option. Okay, so we would go in between the bid and the ask, we go in here at $5.20, so it would cost you $520 for each option you're going to buy. One option controls 100 shares, 520, which is the midpoint there, times 100 is 520. Okay, so I'd come in here at detail, just go here and have a look at the Greeks. Theta, which is time decay, very little, right? So it's negative because working against you, but very little here. Okay, delta here is, if we round this up, 0.7. Okay, so that is in the money. Anything more than a delta of 0.5 is in the money. So we are certainly in the money, and delta 0.7 is excellent. So it has a 70% probability of finishing in the money, this option, by expiry. Okay, so the probabilities are on our side there as well. And also every dollar the stock goes up, the option will move up about 70 cents. Okay. Now, it obviously doesn't take into account volatility and things like that, but that gives you a rough idea. So I would buy the 1750 call going out to the 21st of January 2022, okay, for $520 a contract. Okay, so that's what I would do, right? So that is a complete trade, my friend, from A to Z, all the way from how you would find it using FinViz, okay, scanning for the stock, what to look for, and then going all the way through the entire process that I use to actually find a candidate. So is this a stock or this an option trade that I will take? Yeah. Yeah. So this is a real life example here, and I hope you guys enjoy that. Let me know, right? This is something that I haven't done on the YouTube channel before. If you guys enjoy it, please send an email to support@cashflowoptions.com.au. support@cashflowoptions.com.au, because otherwise I won't know whether you like it or not, right? And you want me to continue to do videos like this. We also have a website, which is cashflowoptions.com.au, and you can go there and actually join for free a mini course, a 6-part mini course that I've done, which tells you the basics about how I trade options. Obviously, what I do with my members is much more in detail, but it gives you a good idea about the way I think about trading options and the way that I actually do this. So, go to cashflowoptions.com.au and join up for that 6-part mini course. It's free. I think you'll get a lot out of it as well. All right, my friends, let me know if you enjoyed that and you want me to do more of these. My name's Sean Allison. All the best, and bye for now.